Well, good afternoon, everybody, and welcome along to the first of these IPSX webinars. These have been designed really just to help explain a little bit more about the IPSX exchange, and these will be available as a MP4 file download from our website shortly after we finish today. So I'm delighted that you've decided to join us, and this afternoon's theme is looking at how does a regulated market work. And I'm delighted to be able to welcome Anthony Gahan, the founder and chairman of IPSX, to talk to us about how the exchange is going to be operating and how it works. And I'm equally delighted to welcome Alison Scott-Bishop, who's head of compliance and legal at IPSX. So this session will last about 30 minutes or so. We do have the ability for you to be able to ask questions, and these can be submitted using the Q&A box, which you can find on the bottom of the bar. And it may be that you just have to jiggle your mouse a little to activate that bar. And once you do that, you'll see that a little Q&A box will appear alongside raise hand and chat. But we're not going to be using the raise hand and chat options today, but we are going to be using the box for questions. So the way that the next sort of 30 minutes or so will work is that I'll be inviting Anthony and Alison to take us through a few thoughts and a few slides, and then we'll finish with a short Q&A at the end. So if you do have any questions that you would like to pose to the panel and generally to us, then do by all means please use that facility as we're going along. And we'll try and answer as many of those questions as we can at the end. But for now, let's get going. And may I ask Anthony to start us off? Thank you.
Okay, well, Kevin, thank you very much for that introduction. I think probably the best place to start really, although we want to talk about how the IPSX market works, it is a regulated market, and Alison can walk you through more of the detail in relation to that. We thought that it would be worthwhile also just allowing everyone to get to the same point with a little bit of an introduction as to what IPSX is, why it is, and why is it a different proposition to some of the other stock exchanges that exist in the world. So the first point really was, I guess, looking at what was the or what is the whole ethos of IPSX. So unusually we start with a nice picture which really talks about, in our mind, tries to visualize the world of commercial real estate investment, and indeed the wider investor world. So this pyramid that you can see on this particular chart, the line that comes up to the top segment at the bottom, at the top of the pyramid, talks about the specialist investor. That's the investor that today is a private investor typically, and is able to deal with the enormous check sizes needed to buy institutional grade real estate, but is also able to deal with the management issues and the liquidity or lack of liquidity in the market. And if we were drawing this to scale, we'd probably make that pyramid, or the element which is the specialist investor, a dot at the top of that pyramid. The reason for that being that, in fact, proportional to the rest of the investment market, it is tiny. And despite that very, very small constituency, it has highly recognizable names from the real estate investment world, which are all known to you. So when we were devising and putting the proposition together for IPSX, clearly we wanted to make sure that the people at the top, who were the owners of the assets, were interested in connecting with the people below the line, which is what the exchange is designed to do. And why it's interesting to connect with the people below the line is, largely speaking, because all those other constituencies, starting from the generalist and non-specialized investor, which might be an enormous institution, being the second tier down below the line, actually had a very, very low exposure to real estate, at least in the UK, something between 2 to 3%. But that's replicated probably no more than that, in many cases much less than that, in other geographies. And so the investors in those different segments, and you can see that as you go down this, actually the exposure becomes less and less, could be accessed with a new product. And that new product actually, in a way, was something that felt like an old product, which was the share in a company that had direct ownership of an asset, and that asset was a real estate asset, and therefore that drove all the economic characteristics of that asset through to the shareholder. So what we found was there was a huge amount of demand from the people below the line wanting to connect with the people above the line, and vice versa. And hence the IPSX story progressed. So just to recap on what IPSX Group is, it is a market infrastructure business. Increasingly, it will be a data business, and that is both around market data as well as commercial real estate data, which is interesting to, I think, many of the people on this call today. But it is comparable to any other international stock exchange in terms of regulatory status, functionality, but it is different in terms of focus and market position and indeed scalability, because real estate is not an asset class that typically, with the exception of the REIT fund market, has actually had access to the public investor. We designed it in partnership with the real estate world. We have something which is a regulated market through our UK subsidiary, IPSX UK, which is designated as a recognised investment exchange. There are now 7 of them, including us, in the UK. The other ones are very familiar, big international names like the London Stock Exchange, the London Metal Exchange, Euronext. We also have recognised stock exchange status, and that's an HMRC designation, and that is specifically to allow for companies that come to our market to also, if they satisfy other criteria, to actually obtain REIT status, so the tax status, which is important to many investors. And we operate a MiFID regulated market, and that regulated market means also that the issuers, the buyers of shares, actually are reflect the plurality of types of investor, and those shares, for example, at the retail level, quite comfortably sit within SIPs and ISAs and other good things like that. The management team is from recognizable financial, market infrastructure and technology businesses. Our shareholders are largely institutional. They are mostly real estate or private equity. British Land is a REIT in itself, and a very substantial one that many people will be familiar with. And what we obviously have to do in terms of operating a market like this is to maintain regulatory and commercial neutrality. The key difference that we have in terms of product is that this is a market that allows the IPO of a single commercial real estate asset. So that would be an asset which is owned by an operating company, and that operating company's sole purpose would be to manage that asset for the benefit of its shareholders. And with the REIT status and with the functionality of the market, this is pretty transformational for the real estate world. You'll notice, if you have good eyesight, that there is an asterisk at the bottom of the page which talks about the fact that we will also admit to trading multiple asset issuers. So where that is, this is all to do with correct market price formation. So our view generically is that market price formation on REITs, conventional traditional REITs on generic stock exchanges, is poor. And that purity and that, I guess, better market price formation is best achieved by having a single asset. And you see that to a certain extent in companies which are more focused on generic markets. So it might be, for example, a self-storage business typically doesn't carry the enormous discount that typically is carried by conventional REITs. And that, again, largely is because there is better market price formation on that. People actually understand what it is and not looking at it as a fund in particular. So moving on, just to, again, focus on why this single asset and why a dedicated exchange. First of all, the reason why there is a dedicated exchange is because actually what we're putting forward is new in terms of product, if we use that rather crude term for what we're doing. What it does is it gives asset owners a dedicated capital markets alternative to a private market sale. So that is a lot of optionality for those, which really have not existed thus far. The issuer typically in the past, or rather the asset owner, has typically only had the option of either owning or not owning the asset. With a market option now, the flexibility exists to be able to sell down a proportion of your economic holding in that company and therefore in the asset, and that gives a lot of flexibility to that owner. The use cases we have found over the last, I guess, year or so in particular, as we have come to actually launch the market, the use cases extend dramatically, and they provide new types of ownership and financing models, not just for institutional owners of real estate, but also for owner-occupiers. Owner-occupiers typically, again, if you look at the market size overall, roughly constitute, particularly in the UK, about 50% of the UK commercial real estate market. But there are no trades, or very few trades, in that segment of the market, because these are assets which are often strategically or operationally important. What IPSX offers is a new way to actually own and influence those assets rather than going into a sale and leaseback. And all these different use cases, and they might be in terms of financing or ownership, as we said before, are things that we are engaged with today with potential issuers. Importantly, the single asset proposition allows investors to make their own decisions. And again, one of the things that we found when we progressed our due diligence on the ambition for real estate owners to actually invest in companies listed on our market was the fact that they really wanted to have a specific investment thesis that they could address. In other words, they wanted to pick an office block that was in London and one in Paris and one in Madrid, but they didn't want to buy 100% of those. They wanted to only have 5% of the first, 10%, 3%, whatever. And of course, this is really important for the wealth management world, because with fees sort of being driven down by investors seeking to get value for money, actually the capacity to have an investment thesis and be effectively a stock picker is really, really important. As I said, the single asset company is the only way really to facilitate high levels of market price discovery. And why a dedicated market? Well, first of all, actually this is a product which is which at the moment is not widespread elsewhere. So we have developed the product for the single asset. But importantly, investors have to make a conscious decision to invest in companies on IPSX. And that means that by doing so, they're choosing to dedicate or allocate money to the IPSX market and the companies that are trading on it. And by doing so, what they are doing is they are reducing the equity noise which is found in generalist exchanges. So if you buy a REIT on the London Stock Exchange, for instance, or on the New York Stock Exchange, there is a high level of equity noise, which means that those companies trade largely in line with other types of companies, generalist pharmaceuticals companies, financial companies, whatever it is, because of the way those market works. So IPSX is effectively ring-fenced to be able to only have a comparable competitor set, if you want, that are real estate companies. We are definitively the only regulated securities exchange in the world dedicated to real estate. Often you will see people talking about other exchanges, and these are in fact digital platforms. So when we're talking about exchanges, we're talking about regulatory approval, infrastructure that you would recognize, the ecosystem, which is all the professional world that sits around it, and some of you are on this call, not a digital platform which doesn't necessarily comply with all of those elements. And the point about that really is that we are talking about institutional grade real estate, which for our simplistic purposes is probably assets which are at least £50 million and above. But often they are single assets which are hundreds of millions of pounds, if not billions of pounds. But key to what investors wanted to see was the ability to access this market, which meant that that product had to be available to all types of investors, and hence the regulatory approval that we obtained. And also that the market liquidity, recognizing as well that this is a yield product traditionally, and to that extent, maybe there is lower liquidity because people want to capture that yield, but nevertheless, best market liquidity is actually obtained by having a structured shareholder base which reflects different hold periods, costs of capital, ambition, etc. Beg your pardon, just moving on. So really just lastly, before passing on to Alison to talk about how the market works, in very simple terms, what are the benefits for both sides of the equation? On the issuer side, what you have is a public market security value as opposed to an asset value. You have liquidity and accessibility, and both of those imply a premium. If you can buy and sell something easily without changing the price, that's worth something to the investor. If you can buy it directly rather than paying a fund premium, that's also attractive. And so what you have is you have also a closeness, and there's been a lot of talk in the wealth management world about engagement and impact value. And what we know is that real estate is an asset class which has particular affinity for specific groups of people, particularly investors that might be familiar with that particular asset geographically or emotionally or thematically in terms of what sub-vertical it sits in. So this is really attractive for the issuer to be able to impact, to sort of engage with the issuer world, and it has an asset valuation impact. For the issuer as well, these are going to be, as Alison will talk about, IPOs which have professional asset management. So for the original owner, that's an opportunity to have a continuation of a management role. They have the flexibility to sell down a proportion of their economic holding. The speed to market is probably much faster than the private market on average these days. This is a very simplified prospectus or a straightforward proposition. And therefore we think the speed of execution of our IPOs will be that much faster. And as I said very early on, this is about accessing new investors. It's the first time that the real estate world is able to access not just equity investors, which was the chart that we showed on the first page of this, this presentation, but also because these assets have fixed income characteristics, we also know that it appeals to fixed income investors, and indeed this plurality of different types of equity and fixed income investors is all good for the liquidity of the market, which is something universally sought by the real estate and the investment world. Just switching to the investor market, important very much, of course, is yield. Transparency is something which, again, is sought after by most people and actually typically reflects better valuation if there's transparency. Liquidity, as we talked about, is vital, particularly for retail investors or people who are generalists who don't necessarily want to hold these things forever. And accessibility and regulatory protection, likewise, deeply, deeply important. So really, just as an intro to IPSX and what we think it does, and if I may pass on to Alison to talk about how it actually works.
Thanks, Anthony. Just moving the slide on to look at what our market segments are that we're going to be offering initially. Oh, little moment of technology. Here we go. Thank you. So to recap some of what Anthony's already said, IPSX was granted recognition by the FCA to operate in the UK as a recognised investment exchange, or RIE, in early January this year. And shortly after that, we secured HMRC designation as a recognised stock exchange under Section 1005 of the Income Tax Act 2007. So the recognition we received from the FCA enabled us to launch the first of our two market segments, IPSX Prime. This is, as Anthony mentioned, an EU regulated market, which enables prospective investors to bring to the market an initial public offering of shares in companies which own underlying single commercial property assets or multiple commercial property assets with common features, which are or are proposed to be securitized and traded on the exchange. As IPSX is also a recognised stock exchange for tax purposes, again, as Anthony's mentioned, This does mean that companies also have the option of establishing themselves as REITs if they meet the specific conditions to do so. The process for admitting a prospective issuer's securities to trading on IPSX is exactly the same as it is for a traditional equity market. So a prospective issuer will need to apply to IPSX to have its securities admitted to trading, and will need to prepare and submit a prospectus to the FCA's, what they now call Listing Transactions Department, previously the UKLA, for their approval. The FCA will also determine the eligibility of any issuers for admission to the official list. In order to qualify for admission to trading on IPSX, as noted on this slide, the issuer will need to sell down a minimum of 25% of the underlying company's shares at the point of admission. It will need to limit the leverage at admission to 40%, and it will need to produce a full set of audited accounts. The prospective issuer will also need to appoint an IPSX lead advisor, an IPSX approved valuer, and an IPSX market maker. Details of the firms which have begun to be admitted as members of IPSX in these categories can be found on our website in the members section. The IPSX lead advisor will take a lead with the IPO process, and they will coordinate the activities of the other professional advisors to ensure the successful admission to trading of the issuer on IPSX Prime, including managing the approval process with the FCA. The market maker will facilitate trading through making continuous two-way prices in the security throughout the trading day once the issuer is admitted to trading. Those are fairly familiar roles, but the role of the IPSX approved valuer is a unique role to the IPSX model. The IPSX approved valuer is required to produce an RICS Red Book compliant valuation of the underlying property asset or assets to accompany the initial prospectus, and then produce further such valuations for publication to the market on a 6-monthly basis after the issuer has been admitted to trading. A range of other advisors, such as bookrunner, lawyer, auditor, registrar, PR advisor, financial printer, etc., will also be need to be appointed, as they are for any other IPO. And over time, we will start to give the names on our website of firms falling into this category who have experience of IPSX issuer admissions to give a helping hand to IPSX issuers. As also noted on this slide, we have plans for a second segment which we intend to offer subject to regulatory approval later this year. That is IPSX Wholesale. This market's designed to cater for institutional investors only, those who want to trade in shares in more complex structures which aren't suited to direct retail investment, such as joint venture REITs. We are in the final stages of discussion with the FCA about this particular market segment, and obviously we'll make an announcement once we know when we can take things forward with it. Moving on to look a little bit more detail at the process for admission to IPSX Prime. The slide we've just moved on to covers some of the same ground as what I've just gone through, but this illustrates it in a bit of a diagram that shows the various stages that an issuer will need to go through with identification of the real estate asset, establishment of a company that owns the property and it wants to issue the shares, and then the drafting of the prospectus. And this is probably the phase of work in the IPO process that will take the longest, probably take a few weeks to pull the material together, and will usually involve all of the advisors to the issuer because of the need for accuracy and verifications. Once produced, the prospectus and other supporting documentation will need to be submitted to the FCA for approval, and at the same time to the IPSX market regulation team. The FCA review timetable for equity prospectuses is currently 5 days for first submission and 3 days for each subsequent review, or turn, I think is their parlance. It's anticipated that the total vetting process will take about 4 weeks. For our part, the IPSX market regulation team will align its review timetable with that of the FCA, but they will not be formally approving the prospectus. That approval process is down to the FCA. Once the FCA has approved the prospectus and the market regulation team here has received and accepted all the information they require, the IPO can then take place and the financial instrument can be admitted to trading on IPSX Prime. Secondary market trading on IPSX Prime is based around the market maker model. Market makers post continuous two-way prices in securities on the IPSX trading platform throughout the trading day. My next slide will illustrate the trading day, so I'll come to that one in a moment. Market makers are required to deal at their displayed prices and sizes when contacted by brokers acting on behalf of investors. And there's also an opportunity to submit orders into opening and closing auctions, although it should be noted that market maker quotes and orders will not interact. Initially, and shown by the dotted line around clearing, trading on IPSX Prime will be uncleared. It's, however, an area we're going to look to build out on as the market grows. But settlement will take place bilaterally between the parties to each trade through Crest. Following admission to trading, issuers will be subject to IPSX ongoing obligations, and these are set out in the IPSX rules for issuers. These obligations include requirements to retain an IPSX approved valuer and at least one IPSX market maker, to obtain and make public half-yearly Red Book valuations from their IPSX approved valuer, to make certain disclosures through a regulatory information service, and to appoint an IPSX lead advisor to handle certain future events, such as the issue of further shares. There are also requirements in the rules in relation to the handling of significant transactions, related party transactions, and reverse takeovers. And again, you'll find those in our IPSX rules for issuers on our website. And finally, just to note that the requirements of the Takeover Code and indeed the Market Abuse Regulation are all applicable to IPSX issuers. My final slide, as I said, illustrates the IPSX Prime trading day timeline. New securities will be admitted to trading on IPSX Prime at 8:30 in the morning, and the system will then be open for market makers to input quotes and for all trading members to input trade reports and orders for inclusion in the opening auction. The opening auction will take place between 8:50 and 9 AM prior to the market opening for trading at 9. The mandatory quote period, during which market makers must post firm two-way prices in an exchange market size, will then run from 9 AM till 4 PM. The close of the mandatory quote period is preceded by a 10-minute closing auction between 3:50 and 4 PM, and the market then remains open for a further 30 minutes until it closes at 4:30 PM. Full information on all of these phases and some of the terminology I've just used, such as exchange market size, can be found in our IPSX guide for trading members, which, as ever, is available on our website. This explains trade reporting responsibilities, the way opening and closing prices are calculated, terminology such as exchange market size and maximum spread for market maker quotes, and the trade reporting and trade publication requirements for IPSX. So hopefully that gives everybody an overview of the way IPSX Prime will operate for issuers on IPSX.
Great, thank you very much, Anthony, and to Alison. It was very helpful. Thank you to Anthony for explaining a little bit behind the theory of why IPSX has been born, and to Alison for taking us through the process and the way that the new exchange will work. Now, for those of you that are sharp of hearing, you'll just have heard Mr. Trump go over our room, so thank you to him for the slight audio interference. But let's move on. We have had a couple of questions, and we do have time for those. So I'm going to ask Alison and Anthony just to think about these, and it may well be that Anthony wants to take the first question, which is, can you give an example of the sorts of product, if you like, or the sorts of assets that would satisfy the commonality test? And if you remember, Anthony was speaking about what makes that kind of application work, the one between a single asset and one that would be a multiple asset. So, Anthony, are you able to answer that question, please, around commonality?
Sure. So, as I mentioned before, the key point here is around the ability to get correct market price formation on the asset. And so this commonality test, which is something which the exchange team will opine on, really is looking at whether or not an investor can look at these different assets and actually consider them to be highly comparable to the extent that the economic characteristics of those assets actually are all exactly the same, or at least collectively they give a picture which is something highly understandable. So if we're talking about what sorts of assets that might be, an asset might be, for example, a number of data centers all operating in a very similar way and often having the same sorts of clients all around them. It might be a grouping of care homes, it might be a number of supermarkets. We talk sometimes, as an illustration, we use Broadgate as an example simply of a number of different central London office and indeed other types of assets, but because of the co-location there, and again that's another feature in terms of looking at whether or not this satisfies the test, there is a sense of understanding what that is about, and therefore that would apply. I think if we were talking about an office in Glasgow, a supermarket in Southampton, and a data center in Paris, probably you get it that actually that would look more like somebody trying to create some sort of fund. And indeed, that is the key thing, is to stay away from that perspective, because that is the commercial and indeed the technical perspective. I don't know, Alison, whether or not you wanted to add anything to that.
Anthony, yeah, I think the examples you gave are very pertinent. As you say, we are looking at assets with a high degree of commonality. So maybe a university campus and the buildings on it, something that is recognisably, as you say, valuable as similar assets rather than disparate assets.
Okay, thank you both very much. I think that's pretty clear. I would also add that if there is interest around this point, and we have some particular queries about this, then please, by all means, drop us a note, give us a call. We're very happy to answer any of these kind of specific points in further detail with you. Let's move on. We've also got a question here about, is the exchange open to retail investors? Anthony, you were speaking earlier about our ambition of how the exchange has been developed to create a much broader appeal to the wider market. Now, it sounds to me as though we might have answered that, but do you want to emphasize perhaps any further points around this retail investment market?
Yeah, thanks, Kevin. I think very specifically, the reason why the license that we have elected to obtain for IPSX UK is what it is for this very point, is that it has all the protections for what would be perceived by a regulator as the most sensitive investor sort of segment, being the retail investor. And I think one of the things that we are commercially set on is the fact that often this particular segment of the investor world is excluded from things which are institutional, which would typically be picked up by a big institution. And whilst, at one level it can be accessed through a sort of fund structure, the world has moved on, and the way in which we have received feedback from the market is that actually those investors want to make their own choices, and those own choices can be facilitated by buying instead of a Barclays Bank share or a Vodafone share, the share of a company that owns a single asset trading on IPSX.
Excellent. Thank you very much indeed. That's great. And I think that's a really good point for us to end the webinar on today. And may I just close again by thanking everybody for taking part and for coming along and logging on and listening to what we have to say. And I hope you found it useful and helpful in understanding a little bit more about the very first stock exchange dedicated to real estate that we are bringing through. So our next webinar will be on the 25th of June. We're going to be looking a little bit more closely at what assets are going to be suitable to be admitted to trading on IPSX. So please do join us on the 25th of June to listen a little bit more about that. But for now, just as a reminder that this will be available shortly on our website as a download. So thanks again for joining us, and we look forward to sharing again a little bit more about IPSX with you all very soon. Thank you and good afternoon.